Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I hope y'all had a great weekend, and I hope you're staying warm out there. I know a lot of areas in the country it's freezing cold. It's definitely very cold here in Texas, and we're not used to this at all. And I know, but it's nothing compared to what a lot of people are getting up north. So let's check out where the markets are at. They're heading on down as well. We got the S&P is down 5, almost 6 points right now. We have the Nasdaq down 17. The Russell's down about 9 points on the day with the Dow down 51. Gold's currently up $1.20, but that's not really telling you the picture there. Got a massive spike this morning, just off the news and everything else going on. There's several reasons to go back in and analyze that, but bottom line, it was an insanely fast, massive move, and that's one of the beautiful things about trading on a platform that has defined risk trading. Looking on over at silver. Silver is currently down just about 1/3%. We got copper is up just a little bit right now. We got oil is down 53 cents. We have natural gas actually, barely down about 1/3%, which is pretty small for natural gas. We got corn up just $1 on the day. We got soybeans up $8. So yeah, corn there up $1. We got euro dollar up 63 pips. We got pound dollar merely just a pip. So basically flat and unchanged on the day compared to Friday's settlement price there. We got the Aussie dollar up 18 pips. We got the euro yen down 58. The U.S. yen's down 89. And the pound yen is down $1.19. Then looking on over at the U.S. CAD, it is currently up 7 with the dollar franc down 29. So the yen also, really just increasing a lot in value. They're dropping. They're gaining strength against the other currency pairs. So a lot of strength right there in the yen. But, yeah, it was just really interesting watching this and, looking at some of the markets and some of the things that are going on. And, it's gonna be a wild week. So get ready. Earnings season starting back up here. And we got some big announcements going on. And so that's one of the things, of course, we like to go through on Friday mornings with you. Or not Friday. Friday mornings I go through, we go through some basics on the bull-bear binary hour. We talk about some of the ways that we trade news, take advantage of that. And then Friday afternoons, I go into, the next week's layout. But on Monday, I like to go through the detail, give you the stats. Okay? So, we do different things throughout each day of the week. And I want to make sure you have the stats on how to trade some of these news reports and what's coming up. Because we got some big reports. We got the NFP report coming up. We got Australian retail sales. We got Bank of England interest rates. We got the European interest rates and press conference. We have the U.S. non-farm payroll, the NFP reports coming out. We have the Canada employment change. So some big highlights on the week. So let's get you some stats. First thing we'll go through, and we can look at a few different things. But let me open up this chart. Give me 1 second. And I'll pull it up here for you. And we'll just look at some of the moves that happened off of the most recent reports. And then we'll go into the details over here. So let me pull this right over here for you. And it looks like the report right here on the PMI came out this morning. And that was over the British Pound Services PMI. Came in at 58.8, worse than expected on a 60.4 expectation on the 430 report. And we got a little bit of a drop right there. Pound got nailed a little bit on that, you can see. And closing right there around, 63.72. And we're going to move down to, let's see, about 36 pips. Our high to low, and this is a really important number. I talk about this all the time. I quote high to low for you. And when we're looking at that high to low, that's the main number. We got 51 pips. Well, that's our expectation on the trade. Okay, we're expecting a 50-pip high-to-low move. That doesn't always mean 50 pips from when the report comes out. Sometimes it may drop down 36, rise back up at 36, and gain another 20, and that's high-to-low. And you want to know that. So that way, when you see it hit that peak, you're like, you know what? This trade's probably done, and I may need to try to bail out of this trade at break-even, or as little loss as possible if we get that move, because that's the move that we usually expect. Okay. And but anyway, so you got all those little details, and so you saw that report. We can go and look at the ISM, and there were a few different things you could have traded on that, straddles and strangles over on Nadex, but mainly it was a butterfly type trade. Going into it, most markets are usually pretty flat heading into the ISM, and looking over at the pound dollar, I mean, you're talking usually about a 25 pip range at most, heading into that report. And again, if we look at that on the morning, that's pretty much what we got right there. We got 17 pips, so it is even less than that for a lot longer. So had a really nice range-bound market. Butterflies were really the choice of trade leading into the ISM report this morning. And when I say butterflies, we do what's called iron butterflies on Nadex, where we'll go in and we'll sell a strike above the market, we'll buy a strike below the market, we'll expect it to stay in between. And if you if you know options, that'd be like sort of like a credit spread, where you're expecting it to stay in between the ranges of on an iron condor type thing. So there's a lot of different ways we can describe the strategy. But bottom line is we're selling a strike above it, we want it to stay below it. We're selling or buying a strike below it, we want it to stay above it because we expect range bound. And that you can do these really any time of day or night. The great thing is on news, you actually can get statistics. You have to go pull them. You have to have the work or have somebody, like me provide them for you. But, you need those stats on what, when our markets usually range bound. Looking on over at the NFP employment change, we got the ADP NFP employment change, and that's going to be coming up here this week on the 8th. And so let's pull up some information on that, because that can be a pretty decent report, but you just need to know what to expect, when to expect it, how to put it all together. We don't really have a whole lot coming up tomorrow, as far as just so you know, on Tuesday. But we got that ADP NFP report. It'll be released at 8:15 a.m. on the 8th, on Wednesday morning. And let me grab you your stats on that one, on the NFP. And we'll dive into it. Okay, here we go. Got them all pulled up. So one thing to note is that there's really only one pair that usually really breaks 50 pips majority of the time. That's pound dollar, and it's still only 65% of the time. So it's not even one of the big movers. Now I'm talking about the ADP NFP. I'm not talking about the NFP on Friday. Okay, so we're talking about the Wednesday report. ADP is like sort of pre-release report. And, it can be semi-range bound, but you're talking 25, ticks or so, as high as 40 ticks like an hour and a half before. So it's not even necessarily the best range-bound trading strategy unless you can find the right contracts. But what you need to be aware of on the ADP NFP, more than simply trading to trade it, is just be aware that it's there. So if it's massively off from what they expect, it can cause a dramatic move, and you want to be ready for that. Looking on over, we're going to have the retail sales Wednesday evening over in Australia, and usually not a market mover at all. Okay? So it's definitely, if you can go in on that trade, if there's a way you can take advantage of it, but it usually just does not move the market. And let's see, retail sales are at 7:30. So that means you'd have to be looking at probably 11 o'clock expiration. And some people go, well, I can't trade at 11 o'clock expiration because, the report comes out at 7:30. It's like, no, that's actually the point, is it comes out at 7:30, and you only have, on average, about a 30-35 pip range move. So if you can get that further out expiration over that 2-hour period there of the average, then just the time alone should erode it so you can close it out within a couple hours. And only 20% of the time does it actually even move 50 pips. So it's a very, very slow moving. Aussie yen is even better on the percentage. Only about 17% of the time does it actually move, 50 pips. But its average move is a little bit higher, about 40 pips average move. So it has a little higher average move 2 hours after the announcement. But you can hop in before that announcement when that maximum implied volatility is in there. Grab it at 11 o'clock so you have the time in your favor. See if you can get that thing wide enough. And if you can, then you got yourself a great trade, potentially. Looking on over. Now, of course, now we're going to get into the really heavy stuff going into Thursday and Friday. And on Thursday, what we're going to have coming on up is we're going to have the Bank of England, putting out their minimum bid rate, their official bank rate, their rate statement, all that stuff, asset purchase facilities, all that information is going to be coming out, at one time for you. And so when that comes out, we usually get some great moves on pound dollar, and pound yen. Both pretty much 80% of the time move 50 pips or more. And I'm giving you that stat to let you know, hey, we expect it to move at least 50. And why do I always look at that 50? Because a lot of times you need that kind of movement to really be at least even break even on a trade. So you want to know that the probabilities are in my favor of break even. Now, what about the possibilities of being profitable? So with the possibilities of being profitable, the pound dollar moves about 85 pips within 2 hours or less after the announcement on average from high to low. The pound yen moves about 92 pips on average from high to low. So massive, massive moves, both of them with high probabilities of breaking 50 pips with a very large range. Should give you plenty of setups on the spreads and on the binaries to be able to look at some trades. The spreads, you're going to have, expirations at 5 and 6 that you can, and 7 that you can take advantage of. On the binaries, you're going to have, let's see, 7 a.m., 11 a.m., 3 p.m. that you can take advantage of on the pound dollar and the pound yen there. So you can look at both, see which one you like best. I usually personally prefer the spreads on these strategies, even though a lot of times you can get the binaries a little cheaper. The problem with doing a binary strangle, meaning I'm going both directions, the problem with doing that is either I make my money or I don't. Okay, where the spreads, either I make my money, rarely do I have max loss, okay? A lot of times you can break even or hit your profit target or, maybe just, make or lose a little bit on the trade. So, I like the risk control a lot better on the spreads for doing straddles versus doing strangles on binaries. All right, now, also you need to understand that move needs to happen pretty fast, okay? So, if this thing's just barely moving around, it's probably not going to happen fast enough for you. So you may want the 11 o'clock or 3 o'clock expirations, and here's why, is because the EU interest rate's going to come out. So it's going to react to that, and unless they do something dramatically just shocking everybody, we still should get a good move. But, again, the EU announcement, everything's going to slow down again, and it's going to wait on the minimum bid rate to come out. There really should be no surprise. We usually don't expect any kind of big movement off of that bid rate coming out of the EU at 7:45. But then at 8:30 is when we really expect things to start moving. Okay? And so that's where things, and why do things start moving then? Because we have the ECB press conference. And that shows you what really rocks the market. So the interest rates, if we look over at those and check out what the range is, let me go into that for you. Okay, the European interest rates, we're talking like, about 78 to 75 pips. You'll get, average range high to low after the interest rate announcement. But that movement is really due to the press conference, not so much to the announcement itself. And we're looking at, over 80% of the time, a lot of times it will actually break 50 pips. Now, again, the big move, the big move is actually going to be based on the press conference itself. And that's where we look for all the clues. That's where we basically look for the big move to happen. So just time that accordingly. And people go in, they'll mistakenly try to trade the interest rate announcement on the EU, and not knowing that usually it's the press conference that makes the euro move. Okay? Or they'll try to trade the pound dollar and they'll try to begin at time. They don't understand that if that move doesn't happen fast, it'll slow down and wait for the EU press conference to happen before it starts picking back up speed. So I just want to give you some of those little tips and tricks to stay ahead on these news reports. And stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. So just checking everything out. We got the markets moving. We got the Russell's actually exceeded past its 1 deviation level a little bit earlier. Just hanging out right there. Now, when I say 1 deviation, of course, I mean low to high. Hasn't quite hit the actual -1 deviation, but we're getting some volume spikes right off this negative 0.7 deviation level right here. So giving some potential trade setups. And let's look around. Let's see what else we got going on in the other indices. Checking out the S&P. And on the S&P, got the same thing going on, getting that confirmation right there. Moving 1 deviation, getting volume spikes right off of it. And the NASDAQ, so looking over at the NASDAQ, and I love when you see, of course, the confirmation across multiple indices at the same time. There's another V-spike, and then flies on back up. So great trade. That trade pretty much is done right there on the NASDAQ. And then looking over at the Dow. So on the Dow, let's see what we got. We got some nice moves right there, again, bouncing right off that with some volume spikes. And volume spike, basically, you can just see that on your chart simply as looking at when volume is twice the amount of the bar before and after it. So if the bar after it had half the volume, the bar before it had half the volume, and it happens at a deviation move, then that's a high probability reversal trade when the fourth bar, the third, like so you got bar 1, 1,000 volume, bar 2, 3,000 volume, bar 3, 1,000 volume. And the price, again, is at a deviation. And on bar 4, when it breaks the high at bar 3, that's your reversal trade. All right. So we have a couple more announcements we were talking about. We were talking about the Bank of England. We were also talking about the ECB interest rates and going in, hey, don't forget the big move usually happens on the press conference. And a lot of people, it's amazing to me how many traders go, I don't need to know that. I don't trade news. I do this. I do that. It doesn't matter. Okay? You need to be aware of what news is coming out. I'm not saying you have to trade it. If you do like trading it, I love trading it. It's up to you. But you need to be aware of it. So you may not ride the bus either, but you might want to be aware of, a bus coming before you, cross the street and it hits you and kills you, So you need to be aware of the bus regardless of whether or not you ride the bus. And so you need to be aware of the news whether or not you're trying to ride the news, okay? Whether you're trying to take advantage of that news and make money on that news, because it can hit you very hard. And if you don't have either a defined risk instrument, you're not, aware of it, you can hedge a position. There's a lot of things you can do to help yourself as a trader. And a lot of times when you're going, what happened and why did that happen? A lot of times that answer is because of the news, but you had no clue it was coming. So, I just try to make sure that you're aware of that. Just like a lot of people, they don't know statistics, and they're like, I just trade. That's great. But you need to know when the market's pretty much reached its maximum expansion point, expected expansion point on a day, because that'll let you know, it may be time to stop taking shorts, okay, in the market. And so when the market moves a deviation, usually it's not going to keep going. So it may, but you may want to back off, tighten your stops up. So there's multiple things you can do that'll help you out, but that's not when to start going. So, you wonder why, it seems like when I try to get in the trend, I always get in right at the end of the trend. Well, that's because you're always getting in right at the deviation level, okay? And so using things like statistics and, fundamental news announcements, they give you an edge that most investors don't think of. Most traders don't think of. They are just looking at indicators, they're just looking at charts, which I believe rule supreme. They rule over whatever the news says, because the news can say this is horrible, and the market can go up, okay? And the deviation level can say 1, but the thing can move 3. So I'm all for, the charts reign, but you need to be aware of when certain announcements could have a high potential impact on the market. Just like being aware of seasonality, which is the third part that a lot of traders don't bring into their trading mix. It doesn't mean you have to trade directly the seasonality, but being aware of the seasonality does give you an edge over other traders because you're aware of when money flows into the market, pushes the market up. So, sort of the payroll cycle effect is a very simple seasonality that a lot of people aren't aware of. Most Americans get paid on the 1st and the 15th. All right. Now, also, when those happen to coincide with Fridays, then a lot of Americans get paid on Fridays. Okay. And then when you add on a holiday weekend, then, you got people all being paid early on the same day. So, the 1st is on a Monday, and then all of a sudden, it's a Friday, so they get paid on Friday. So, things like that, what happens is all these people get paid. And then what happens? Money goes into their 401k, which goes into what? To mutual funds, which goes into what? Into stocks and drives up the market. Now, does that mean the market's going to be bullish and up, on the 1st and the 15th of the month? No. Okay, what that does mean is there's more dumb money, and what I mean by dumb money is money just on autopilot flowing in on specific days of the year, and you can account for almost all the gains in the market on those days of the year. And what that may mean is if it's a down day, it'll be less of a down day. If it's an up day, it'll be an accelerated up day. And just being aware of these simple things will help you be one step ahead of other traders in the markets. And again, they're not your decision makers. Your chart's your decision maker, but those things are things that you're aware of, so that way you don't get caught off guard when the chart just goes the opposite direction of what you thought was going to happen, because you are aware there's these little clues of what's coming up next. All right, stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the 3 most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these 3 sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. So, looking on over here to check out the markets. Now, we got, like I said, we got a couple more reports. Our end-of-week reports. We got the Canada employment change coming on out. There's several, U.S. and Canada reports coming out at the same time. That usually makes this one of my favorite trades. I'm not saying it always profits, but it has done very well a majority of the time for me. And that's on Friday. I go in and I look at straddles and strangles on several things, but one of those being the dollar CAD. Over 80% of the time, no, 85% of the time, the dollar CAD breaks 50 pips. And in addition to that, its average range is 80 pips. And so it's a great potential straddle or strangle trade as long as you can get the binaries or spreads on with appropriate premium collection, meaning you're not risking too much to do the trade. And if it's too high, sometimes I'll do the opposite. I know back on the FOMC announcements last time we had them, I was looking at the reports, and I was like, wow, this is way too expensive, so I'm just going to do the opposite, and I just reversed it. And instead of trying to straddle it, I basically did a short straddle on the trade. But with capped risk on it, and it worked out great. So if they're too expensive, just if you think I can't do this trade because it costs too much or it's too little, don't be afraid to think outside the box and go, well, what if I did the opposite? And a lot of times we're very hesitant to do that because I'm looking for the market to move, and this is too expensive to make money even if the market does move. Well, that should be a clue that you should be the guy filling the other guy's order and hopping on the other side. Because he may not know that, and you do, okay? Looking on over at the NFP reports coming out. So U.S. NFP, we got some big movers and shakers. So one of my favorite reports to trade, we got the euro dollar, 93% of the time breaking 50 pips, over 100 pip move. We got the pound dollar, nearly 90% of the time breaking 50 pips, over 100 pip move. We got the dollar franc, basically 96% of the time breaking 50 pips, over 100 pip move. So some massive moves right there. Those are my 3 favorite currency pairs. You can go down from there. Dollar CAD, dollar yen, about 75% of the time break it, and they, they're ranged at about 75 pips average, high to low. But the 3 favorites being dollar CAD, or actually 4, I guess, euro dollar and pound dollar and dollar franc, and then dollar CAD because of the CAD announcements. So those 4 together. And one of the things that I try to tell people, when you're doing this type of trade, like on the same announcement, whether you're doing, like, say, gap trades or news trades or whatever you're doing, and you go, okay, well, and there's all 4 of these usually break like this. That doesn't mean you go, and let's say you're going to risk $100 or $500 or whatever you're going to risk a trade. You don't go in and risk, let's just say your risk is $100. You don't go risk $100 on all 4 FX pairs, okay? Because it's the same trade. So most likely what's going to happen is all of them are going to win, or all of them are going to lose or break even, okay? So now the reason that you would actually do one pair is sometimes 1 or 2 of them will move a lot further, and maybe one of them will lag behind, okay? So that way you sort of hedge out your risk in case 1 or 2 of the currency pairs maybe for some reason is offset, it doesn't move as much. Maybe the dollar CAD this time doesn't move this much, but the dollar franc and pound dollar and euro dollar all take off. You don't know. So you're sort of hedging out your trades, but divide up the risk. $25 a trade, not 100. Like if your risk would be $100 if there was just one announcement and one FX pair that you have the information on the trade. Don't put $100 on 4 FX pairs. Put $25 on 4 FX pairs and still risk just $100 on that one announcement. Otherwise, you end up blowing out your account on the time that it doesn't work, and you feel like you lost on 4 trades when really you just lost on 1. You just did 4 times as much. Okay? And I talked to this, people sometimes they'll do gap trades and they'll do all 4 of them, which, they'll look at pound dollar, or not pound dollar, they'll look at S&P, the Russell, they'll look at the Dow, they'll look at the NASDAQ, they see all these gaps, they trade them all. And let's say they, again, average like $100 risk on a trade, but then they'll put $100 on all 4 of them. I'm like, if one of them, if none of them fill, you just lost $400. And if there was only one of them that qualified, you'd only be risking $100. So why are you risking $400 on the trade? It's the same trade. You're expecting all of them to do the same thing. Again, you're only doing multiple instruments just in case 1 or 2 of them doesn't work out, then, and the other one does, or other ones do, then you're able to, like I said, hedge off that risk. So just make sure you, do that appropriately. So when I'm reading off 3 or 4, pairs to you, you're not going in and just loading up on each one of them when you do these types of trades. It's just a common mistake I see people make, and I don't want you to make those mistakes. Let's see here. I've been there. I've made them myself. And so speaking from experience on those. Anyways, but so that's our main news reports for the week. We do have some other things going on today. Italy has, bank holiday. It's not a big deal. We got trade balance tonight. We got the nomination vote coming out, of Yellen. So all that stuff, all that, news will be flowing out today. And no big, the actual, number will come out soon. And they'll say pass. And there's, nobody will be surprised when that happens. But when it does come out, the markets could react to that. So just be aware of it. And, so there's tons of news feeds and everything else. And let's see. I don't see that it's come out yet, but, it looks like they haven't got around to it as far as I know. I can hop over on C-SPAN and look and see what the schedule is. But we've got tomorrow we got some trade balance reports coming out of dollar CAD. Again, not really major movers. The CPI flash at a euro. And I bring up these reports, some of these reports, because they'll be marked as heavy impact on a lot of the Forex news trading calendars. It doesn't mean, that means like it's important, okay? It doesn't necessarily mean that it actually moves a lot. So heavy impact, and that's another mistake I made a long time ago, is I used to look at all of the red heavy impact reports on government news on the FX trades and try to trade them all. And then I started digging in further and I realized, wait a minute, just because it's a heavy impact, that may mean it's an important number for that currency, but it doesn't necessarily rock that currency. So what rocks the currency is when there's an expectation and the number is significantly off, and that number is expected to have a significant difference in valuation for that currency. So, again, heavy impact does not necessarily mean it consistently moves the market. That's what you're looking for. And so that's the ones I'm usually going over with you. Some other things happening. We got the German Constitutional Court ruling happening this week about the constitutionality of the ECB's outright, spend all you want program. So that'll come out sometime on Wednesday. That could have an impact on the euro and other markets as well, depending upon what side. We already talked about the non-farm employment change. Of course, we'll have the FOMC meeting minutes, not the FOMC announcement, not the press conference, the minutes. So not so much a statistically based number, but usually we can see some insight, especially with the most recent. I mean, think about how we just had QE announced, okay, that they're going to scale it back a little bit. Now, there's a whole lot of other things going on behind the scenes beyond that, but, people are going to pay a lot of attention to this because they actually started to, say that they're going to scale back the $85 billion back to $75 billion. So there will be some interesting moments in that, and expect that to move the market this week on Wednesday at 2 o'clock. And like I said, we'll have some announcements on the Aussie. We talked about those on Wednesday night around 7:30. So even if you're not a news trader, you trade the Aussie, you better be aware of those reports are coming out. On Thursday, sort of more focusing on the non-major reports because we already went over those earlier in the show. But we'll see. We'll have building permits coming out of the CAD on 8:30. This is also when the ECB press conference is happening, so be aware of that. Building permits are coming out. Everybody's going to be talking about the press conference, and I'll be talking about the building permits. But if those permits are off by enough, that could actually have a heavy impact on the CAD. The ECB press conference alone will have an impact on the CAD simply because you're dollar CAD, Euro CAD. So it will still impact it regardless. But the building permits will also have an impact on the CAD. Then we'll have natural gas storage. Just like, by the way, we have Wednesday, oil storage there. And that night, we got China. They'll have a trade balance report come out at some time. Usually doesn't matter. It's not tradable. You can't do anything with it. So there's not even worth being aware of at this point because there's not a consistent impact. And some traders will go, well, I don't know about this whole seasonality and consistent impact on things. And here's what I can tell you. At certain times a day, I live in Dallas, Fort Worth. At certain times a day, there's going to be a lot of traffic on the freeway. At certain times a day, there's probably not going to be much of any traffic on the freeway. And that's sort of, like when you're looking at, seasonalities or government impact reports, all right? Now, there may be a surprise. They may throw up some construction in the middle of the night at 3 a.m., and a lot of times they do that out here. It gets too hot during the day, during the summers, and so they'll work at night. So there may be construction that does make there be a big backup, for 30 minutes on the freeway, even though it's 3 a.m., okay, usually when there's no traffic there. There may be times where it's just not flowing. Maybe it's a holiday and there's not near as many people at work, coming home, in the evening around 6 o'clock. So there can be things that do affect the seasonal cycle. Sometimes they're expected, sometimes they're not, sometimes there's a ruck, okay? So there can be a lot of different things that can impact that, but there is at least a consistent impact at a certain time of day that does affect the traffic flow. And I try to schedule my time around that so I'm not driving right into it. And that's the same thing I'm talking to you about on these news trades. Either you're taking advantage of them or you're aware of them so you don't drive right into them and not know what happened. So I thought I was going to be there in 30 minutes, but it's taking me 2 hours. I didn't know there was going to be all this traffic. Well, it's rush hour. It's rush hour pretty much almost every day at this time of day. So just knowing when those things happen will help you a lot as a trader. Let's see. Like I said, on Friday, we not only have the employment change, but we also have the unemployment rate out of Canada. We not only have the NFP, but we also have the unemployment rate here out of the U.S., and they're expecting 7%. The last number came in at 7%, which was a little better than expected. So we'll see if that trend continues and take it from there. Going into the weekend, no big conferences happening on Saturday or Sunday. Japan will have a holiday this coming Sunday. So let's see what holiday they have on the schedule. The Coming of Age Day. So that's the holiday they're going to be having. And I don't know anything about it to comment on it, but they'll be having one. So just be aware that can obviously impact, again, the yen somewhat during that time. And could mean it could be, a little less liquid, a little more jumpy. Banks won't be open, things like that in Japan. And Monday will be really quiet next week. So not a whole lot going on into next week. But this week you got plenty that you can take advantage of. Let's check out where all the markets are. And let me scroll on down. We'll fly through them. We got the Aussie right now. And it's moved pretty much almost everything is, pushing up towards that one deviation or past that one deviation move. Aussie's almost up there right now, starting to do a V-spike at almost a one deviation hit. So looking like it's starting to head south at the moment. We look over at the euro dollar. And the euro dollar moving on up, and looks like it's starting to spike a lot. So the probability of a reversal at this point at this one deviation high to low move is very, very probable. And I mean, it's just sitting right up there. And it's actually hit a deviation, just not the deviation level. And if you wonder what those are, I post them every night at 8:15 inside the diagnostics section of the members area there. Looking on over, let's check out some of the yen pairs here. We've had some big moves going on to the pound yen. It just came down to 2 deviations. Looks like it's starting to pull back as well, so get a nice reversal right there on the pound yen. So this could be tradable directly on the Forex, could be tradable on binaries or spreads on Nadex. It depends upon how you want to trade it. We go in, check out the pound dollar. On the pound dollar, what we got right now, moved up a 0.5, moved down a 0.5, bounced off that with all those volume spikes, and running on up right now. Set at settlement. But at this point, I would sort of avoid the pound dollar. I don't think it'd do a whole lot from now till expiration, unless you want to do something like a butterfly. Looking on over at the dollar CAD, it moved up. Actually, it did move a full deviation from high to low, and now it's pulling back. It looks like it's literally targeting settlement right now. They're at 1.0638, just a few ticks away, and not a new trade opportunity, but definitely a tightening stop opportunity if you're currently in the dollar CAD. Dollar franc, checking that out. It's been slowly trending down, and it's had a couple spikes throughout the day, but all in all, just a nice solid downtrend. And dollar yen, so wrapping it up on the currencies there, it flew on down and spiked perfectly at the 1.5 deviation level, and then it has pulled back for a great volume spike reversal trade. Now, if we dive on in and check out some of our other instruments, we got gold, which we know just flew this morning, and you can see this massive drop and run back up, and 1247 all the way down to 1212. So, very scary move. If you were a long futures trader, just ow, is the only thing you can say. Because that thing, that's just an insanely fast move, and that would be very painful. Even if I bring that thing down to 1 minute, you can just see it moves so fast. And, crazy times. So, you never know. And, the longer you trade, the more you realize that anything can, and probably will at some point, happen. And all of that move happened within less than a minute. It was in seconds. Okay, so there was no time to react. Okay, I don't care what kind of stop order you had. If you had it here, at best you got filled probably right here on the close. Most likely you got filled somewhere in this range and you weren't real happy about it. So, again, it's a good reason to trade with products that have defined risk built into them. And let's see, what do we got? Some people got hit hard, so I know that's rough when I see it. But let's see here. We got copper. So over on copper, we saw a lot of moves on the metals there. But copper, it has been trending up right now. It's like it's starting to flatten out and pull on back. And silver also had the big move this morning. So let's see here. I'll pull that up. And you look at that massive spike, and then pulls right back up. And, had an entry way down here. That thing just slammed down, didn't hit the stop, pulled back up, and finally turned on back around and heading south right now. So stay there. When we get back, we'll look into some of our ags and some of our energies and wrap it on up. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So let's wrap up and look at a few of the metals and gold. But yeah, that was an insane. It was about 15 minutes after the U.S. ISM came out. So, you know, I'm not 100% sure what tracked it. I haven't had a chance yet to go and do the Monday morning quarterback and figure out what moved the market. But that chart definitely moved. So, anyways, looking over at corn, we got a pretty nice, not quite a full 1 deviation, but we did get a volume spike moving on up, started heading on back down. Some more volume spikes down here, started heading on back up. So there's not a whole lot happening overall on corn. We can check out soybeans. Got a little better movement happening over in the soybean market. But the best part is moving up, you know, like I said, about a solid deviation. Again, bouncing right there off of, with the V spikes off of, you know, right near a deviation level. Now, the main instruments, let's check out, of course, our energies. Check out oil. And on oil, it's just been trending down, down, down. Got a nice move, and just recently hit a 1 deviation level. Did a volume spike on that. Gave a great premium collection trade on collecting on the money when it started pulling back up off of it. So a pretty simple trade that you can take advantage of there. And then let's go in and check out natural gas. So natural gas, you know, lots of things happening with the heat and the cold and everything else going on, but we did get a full 1 deviation move down. You can see just right here, literally, you can see the line where this blue line's tracking high to low, crosses the deviation level, and then we see the market just start to pull back right off of that. And even though it's not, again, a 1 deviation line, it's a 1 deviation high to low. So this could hit 0.7, which means it basically went down 0.3 right here. So as it hit that 1 deviation, then we see the market start pulling right back off of it. So those deviations definitely give you a huge edge in the markets when you're looking at, you know, what's going on and, you know, what way can you potentially take advantage of them. And the biggest thing for me is it's trailing stops, and it's knowing when to be cautious when continuing to take entries, because 30% of the time, I don't expect that thing to keep moving. Therefore, I can choose if I want to continue to take entries, but I definitely don't want to take them, if I see spikes and things like that happening right there at that point on the chart. All right, well, that wraps up our FX pairs. It wraps up our indices. We also got to go in and wrap up the ags and the energies. We went through the metal markets. We talked about the Forex reports for the coming week, what's coming out on the different reports, and gave you a couple of the stats to be able to make your news trade plan for. So hopefully you were able to write some of that down or go back and check the show again. And you can check that over on Tiger TV in the replay section there. And if you have any questions, always feel free to give me a call. I'll be happy to help you out and help you put those pieces together. If you don't know about how to trade on Nadex, you want to learn about how to trade on Nadex, you're curious about what this whole Nadex thing is I keep talking about, and there's a lot of ways to trade it. Okay, I talk about a variety of ways, but if you're trading futures or Forex, you can hedge your trades. You don't even have to be using it as your directional trade. You can be using it to hedge your directional trade. If you're going in and you're, looking to go both directions, you can do straddles. You can do stringles. Great. If you're looking for a way to limit your risk, there you go. Every single product on Nadex has a limited defined risk. So whatever you're looking to do, there's probably a really good application of it. And, if you just figure it out yet, let me know. I'd love to, work through it with you, talk to you about it, whether it be on the air, an email, whatever. But there's a lot of ways to apply it to how you're currently trading. You don't have to change everything. A lot of times it's just, but can it help make your trading better? So to learn about it, go on to TFNN.com, go on the Nadex banner on the right side, and then check out the scanner over here on the homepage of TFNN. I hope you all have a great day, and I will talk to you tomorrow on the Diagnostic Trading Hour. Stay tuned for another great show coming up right after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.